Shares of private equity-backed Freescale Semiconductors and Spirit Airlines will begin trading today with much less fanfare than venture-backed social media companies like LinkedIn, Renren, and Yandex. Our next guest says private equity investors probably jumped the gun a bit on their offerings. Tim Loughran is a professor of finance at the University of Notre Dame and an equity investor scholar. He's joining us by phone this morning from Granger, Indiana. So, Dr. Loughran, thanks for joining us. It's interesting. I mean, you say that these guys who were backing some of these social media companies like LinkedIn probably jumped the gun because they were concerned about high oil prices and the European debt crisis, or is that the case more for the industrial semiconductor companies like Freescale?
I think with Freescale, part of the justification for going public now is the large amount of debt they have. And that's the difference between Freescale and LinkedIn. LinkedIn has no debt. They have some profitability. Freescale has lots of debt. We have a mountain of debt we have to get rid of. Maybe let's just go public, and we may not get the best price.
All right, so if that's the case then for Freescale, we all know the problems that the semi industry is going through right now. What about LinkedIn, Renren, Yandex? Why did they go public here? What seemingly early compared to companies like Facebook, right, and Groupon?
Someone has to be first. They found out how receptive the market was. In fact, LinkedIn should get money from, jokingly, from Facebook to show the high valuation that they have.
I was thinking that they might need to get a commission there.
Oh.
They did put out such a small float, and we're seeing the same thing with the other companies like Yandex. Is that beneficial to them? Do they have to come out later with more?
Well, they can always come out later for more. Let's get it trading. Let's get it trading right. There's lots of enthusiasm. There's lots of media coverage. It's hard to argue how they did it. It's a little bit scary on the pricing, how much volatility, for example, LinkedIn has. On the IPO date and even afterwards, it's kind of all over, but that's okay.
Right. I mean, they did get a decent chunk of money to come out with only, I think, 8 or 9% of the company to begin with. And
they said, now we know what the price is.
I wonder about, people always talk about Facebook's valuation wide-eyed, worried that it's a lot of hype. But, of course, we all spend all of our time on Facebook every day. So what do you think about the social media fad right now? Is it a new way of life, or is it just a passing style? Fad
is such a strong word. I think that it's what people are spending their time on. And you just had this couch potato argument where we're spending more and more time in front of the computer. We used to watch TV. Now we're doing Facebook. We're doing LinkedIn. We're doing the gaming. No, I think it's much more than a fad. And the valuation of Facebook, I mean, I'm sure you've given it some thought as well. Some people are talking about $80 billion. Does that make sense to you? Oh, easily. Given what happened to LinkedIn, there's no doubt.
All right.
That is certainly a possibility.
All right. Hey, Dr. Loughran, thanks so much for joining us. Tim Loughran there, professor of finance at the University of Notre Dame.